Feels like every day there's another crypto headline, right? Bitcoin's up, Ethereum's down, this company's launching that. But have you ever stopped to think who's actually calling the shots? Who's making the rules in this digital Wild West?
That's a question a lot of people are asking, and for good reason.
Exactly. So today we're diving into the wild world of cryptocurrency regulation, trying to make sense of it all.
Yeah, it's a bit of a maze to navigate.
And to help us on this journey, we're using this Investopedia article as our guide, Cryptocurrency Regulations Around the World. It was just published last week on September 20th, 2024, so it's pretty up to date.
Which is essential in this space because things change so rapidly.
For sure. So anyone who's even glanced at crypto news knows it's not exactly a one-size-fits-all situation globally.
Definitely not. The article really highlights this. It's more like every country decided to bring their own rule book to the party.
A global crypto potluck of regulations.
Exactly. Some stricter than others, some still trying to figure out what they're even looking at.
So let's zoom in on a major player, one that's making a lot of noise lately in the United States. Reading this article, it feels like they're trying to fit a square peg in a round hole, wouldn't you say?
Yeah, it's a pretty fair assessment. They're trying to apply these existing financial regulations, many of which were designed way before blockchain even existed,
Oh.
to this brand new landscape. And the landscape's changing so fast.
Yeah, it's like trying to hit a moving target.
Exactly. And the main player in all of this, at least in the U.S., is the SEC, the Securities and Exchange Commission.
Right, the SEC, always see them in the headlines. They've got these lawsuits going on with some pretty big names. Ripple, Coinbase, Binance. What's the main sticking point there?
So it all boils down to this question of whether certain cryptocurrencies should actually be classified as securities.
Okay, securities. For the uninitiated, what does that even mean in this context?
Basically, when we talk about a security, think of it like owning a piece of a company, a traditional investment. Stocks, bonds, that kind of thing.
Gotcha.
Now, if a cryptocurrency is considered a security, then it falls under the SEC's jurisdiction, which means a whole lot more regulations, a lot stricter rules, and stricter investor protections come into play.
Makes sense. So they're trying to figure out if these cryptocurrencies are playing by the same rules as the old guard.
Exactly. Now, you mentioned the Ripple case.
Yeah, that one really threw me for a loop because it seemed like a win for crypto, but not quite a slam dunk.
You're right. It was a pretty nuanced decision.
Yeah.
So the court said that when Ripple sold XRP, their cryptocurrency, directly to institutions, that made it a security, subject to all those SEC regulations.
Okay.
But, and this is the crucial part, selling it on exchanges, that did not automatically make it a security.
Interesting. So it's not a blanket ruling, more like they drew a line in the sand.
Precisely. And it was a big win for the industry because it suggested that simply trading a cryptocurrency might not trigger all those security regulations.
I see. So where does that leave things? Because it doesn't seem like the SEC is backing down completely. This article talks about how they're still pushing for regulation, especially when it comes to Bitcoin and Ethereum ETFs.
Absolutely. They're not giving up that easily. They have this thing called the Howey test. It's a legal test they use to determine if something is a security. And it basically looks at whether there's an expectation of profit from the efforts of others.
So the SEC is saying, hey, some of these crypto assets, especially those tied to specific projects, might actually fit that definition.
Exactly. They're looking at things like, is there a centralized team behind it? Are they promising future returns based on their work?
And then you've got the whole ETF situation.
Right. And that's been interesting to watch unfold.
The article mentions that the U.S. recently approved those Bitcoin and Ethereum spot ETFs.
Yeah, that was a big deal. First ones ever approved in the U.S.
And just so everyone's on the same page, what exactly does that mean, ETFs?
So an ETF, or exchange-traded fund, it's basically a basket of assets that you can invest in. And in this case, it's a basket tied to the price of Bitcoin or Ethereum.
Gotcha.
So investors can get exposure to the price movements of those cryptocurrencies without actually owning the digital assets themselves.
Ah, I see. It's sort of a way to dip their toes in without diving headfirst.
Exactly. And that approval was seen as a step towards more mainstream acceptance of crypto.
So the U.S., it's a bit of a mixed bag right now. Lots of back and forth trying to figure things out. But then you've got China on the complete opposite end of the spectrum.
Yeah, they've taken a much more, shall we say, rigid approach.
To put it mildly, the article calls it a complete ban.
It is. They've banned cryptocurrency enterprises, they've banned mining, they've even banned using cryptocurrencies as a payment method.
Wow. That's a hard line. I mean, especially for a country that's usually seen as pretty forward-thinking when it comes to technology. Why such a drastic measure?
It's a good question, and there are a few schools of thought on this.
Yeah.
One is control. China's government, they like to have a tight grip on their financial systems
Right.
and decentralized currencies like Bitcoin. They operate completely outside those traditional structures. So some experts believe that this perceived loss of control was a major factor in their decision.
I see. It's like they looked at crypto and said, nope, too wild for us.
Essentially, yeah. They want to maintain that centralized authority over their financial system.
So you've got the U.S. trying to fit this new puzzle piece into an old puzzle.
And then you've got China just tossing the puzzle piece back in the box.
Exactly. And somewhere in the middle, you have the European Union trying to strike a balance.
Yeah, the EU is trying to be the voice of reason, I'd say, in
Yeah.
this whole global crypto conversation.
So what's their approach? How are they tackling this?
They're more about establishing a framework, trying to get ahead of potential issues, before they become major problems.
Proactive rather than reactive.
Exactly. And they've actually already implemented this thing called the Markets in Crypto Assets Regulation, MiCA for short.
Micah, catchy. When did this come into play?
It came into effect in July of 2023.
Okay, so fairly recent. And what's the deal with Micah? What's it all about?
In a nutshell, it's about creating a single market for crypto assets across all 27 EU member states.
Ah, so they're trying to harmonize regulations across the board.
Precisely. They want to provide legal clarity for crypto businesses operating within the EU. No more of this patchwork approach.
And what are they hoping to achieve with this unified front?
Two main goals. First, they want to foster innovation. They recognize that this technology has potential.
Right.
But secondly, they want to protect consumers. They're trying to safeguard investors from scams, from market manipulation, all the potential pitfalls.
So it's like they're saying, we like the innovation, but let's put some railings on that roller coaster.
Precisely. They want to create a space where legitimate crypto businesses can thrive, but they also want to make sure that consumers aren't getting taken advantage of.
Smart. So they're not stifling innovation, but they're also not giving it free rein.
Exactly. And MiCA also directly addresses some of the concerns around things like money laundering and terrorism financing. They're requiring stricter identity verification procedures for crypto transactions.
Trying to close those loopholes. So they're trying to be really thorough.
Yeah, they're trying to think of everything. And it'll be interesting to see if this influences other countries as they wrestle with their own regulations.
Yeah, if the EU's model becomes the gold standard, so to speak.
Exactly. It could set a precedent for others to follow.
So we've got the U.S. kind of figuring it out as they go, China saying, no way, not on our watch, and the EU taking this more measured approach.
Right. And it's interesting to see how these different approaches are playing out in real time.
It's like a global experiment.
Exactly.
And speaking of experiments, this Investopedia article highlights a few countries that have been ahead of the curve on this whole crypto regulation thing. Canada, for example.
Yeah, Canada's been quietly making some very interesting moves in the crypto space.
They were actually the first country to approve a Bitcoin ETF, right? Back in 2021.
That's right. Way ahead of the U.S. on that one.
Why do you think they were so far ahead?
Well, it's probably a few things. One, their financial system might just be more adaptable to this kind of innovation. Their regulatory bodies, they've got a bit of a reputation for being more proactive, a bit more open to these emerging technologies compared to some other countries.
So they saw the potential in crypto early on and wanted to be a part of shaping how it develops.
Exactly. And another key part of their approach is how they classify crypto firms. They consider them money service businesses, or MSBs.
MSBs, and what does that mean exactly?
It basically puts them under the same regulatory umbrella as traditional financial institutions.
Ah, so they're treating them like a legitimate part of the financial system, not some separate weird thing.
Exactly. They're integrating them into the existing framework, while still recognizing that digital assets have their own unique quirks.
Interesting. A very different approach than China, that's for sure. It seems like some countries are embracing the future and others are a little more,
Hesitant.
to put it lightly.
It's true. It's the beauty and the challenge of this whole thing, right? It's a global experiment, and we're all watching it unfold in real time.
Speaking of experiments, this article about Singapore really piqued my interest. They've kind of become a crypto haven, haven't they? Especially for long-term investors.
Yeah, Singapore is an interesting case study. They've been very strategic about tracking crypto businesses and investors.
One of their big draws is that they don't have capital gains tax on long-term crypto investments, right?
That's right. No capital gains tax if you hold your crypto for a certain period of time. makes it very attractive for those long-term holders.
Now, for those of us who aren't tax experts, what exactly does that mean? Capital gains tax.
So basically, it's a tax you pay on the profit you make when you sell something for more than you paid for it.
Okay.
Like if you bought Bitcoin a while back and it's gone up in value and you decide to sell some, you usually owe taxes on that profit.
Gotcha.
But in Singapore, they've decided to waive that tax for crypto, which is a huge incentive for investors.
Makes sense. So they're rolling out the red carpet for crypto whales, basically.
Well, not completely unregulated. They still have rules in place to prevent things like market manipulation and money laundering. But they've definitely created a friendlier environment for crypto businesses and investors than a lot of other countries.
Trying to find that balance, attract investment, but keep things stable.
Exactly. And one area where they've been particularly proactive is in the regulation of stablecoins.
Ah, stable coins. Before we go there, can you give us a quick rundown on those? I feel like there's still a lot of confusion about what they are.
You're right, they're kind of their own thing in the crypto world.
Right.
So unlike Bitcoin or Ethereum, where the prices can swing wildly up and down,
Right.
stablecoins are designed to maintain a stable value. They're usually pegged to a fiat currency like the US dollar or a commodity like gold.
So they're like the calmer, more predictable cousins of the volatile crypto world.
Exactly. And because they're more stable, they've gained a lot of traction as a potential bridge between traditional finance and the crypto world.
Makes sense. So why do they need their own specific regulations?
Well, because they're often backed by real-world assets, like actual US dollars held in reserve. Regulators want to make sure that those reserves actually exist.
To prevent any funny business.
Right. They want transparency. They want stability. Imagine a situation where a stablecoin issuer doesn't actually have the reserves to back up the coins in circulation.
That would not be good.
No, it wouldn't. It could lead to a loss of confidence, a collapse in value, and have a ripple effect throughout the entire crypto ecosystem.
So Singapore is trying to get ahead of that.
Precisely. They've implemented pretty strict requirements for stablecoin issuers, including regular audits, transparency measures, all that good stuff. They want to make sure that these stablecoins actually live up to their name.
Smart. So it seems like Singapore is all about fostering innovation, but not at the expense of, making sure things are on the up and up.
Exactly. Investor protection is a key part of their approach.
Which makes sense if you want to position yourself as a hub for this industry.
Absolutely. You want to be seen as a safe and reliable place to do business.
Now let's jump over to a country that's making a much bolder move, Brazil. They've decided to go all in on crypto, haven't they?
They really have. Brazil recently made headlines by officially recognizing cryptocurrency as a legal form of payment.
That's a big deal. So you could walk into a store in Brazil and buy something with Bitcoin.
You could. As far as the law is concerned, it's just another form of currency.
Wow, so they're really trying to integrate it into their everyday economy.
They are. And it's a fascinating experiment to watch. Because if it works, if they can successfully integrate crypto into their financial system, it could have a domino effect.
Other countries might follow suit.
Exactly. Especially countries with high inflation or limited access to traditional banking. Crypto could be a real game changer for them.
It's like a whole new world of financial possibilities opening up.
That's what a lot of people believe. Of course, there are risks, too. It's still early days.
Right, it's not all sunshine and rainbows, but it's definitely an exciting time to be following this space.
It is, and it'll be interesting to see how regulators adapt. Because if crypto is becoming a legitimate form of payment in some parts of the world.
It puts pressure on everyone else to figure out their stance.
Exactly.
So it seems like we've got a real mix of approaches here. Some dipping their toes in, some diving headfirst, some just watching from the sidelines.
Yeah, it's like this global experimentation is happening right in front of us.
Exactly. And like any good experiment, there are bound to be some surprises.
Yep. Oh, absolutely. I mean, we've seen it already. Canada with the early Bitcoin ETF adoption, Brazil going all in on crypto as legal tender, the EU trying to create this unified framework. It's fascinating to watch it all unfold.
And we can't forget about those who've opted out entirely, at least for now, China being the prime example.
Right, taking their own path.
It really highlights the uncertainty surrounding crypto's future, doesn't it? I mean, with all these different approaches, what does this actually mean for cryptocurrency going forward? Can it really become this global asset that everyone's talking about?
That is the million-dollar question, isn't it? And honestly, it's impossible to say for certain, but I do think one thing is clear, that regulation is going to play a huge role in shaping whatever that future looks like.
Regulation is the key.
I think so. The countries that figure out how to encourage innovation while still mitigating the risks, Those are the ones that are probably going to see the most benefits down the line. Finding that balance is key.
So what's the takeaway for our listeners? For someone who's interested in this space, who might even be thinking about investing, what should they be keeping in mind? Because it seems like the rules of the game are constantly changing.
Yeah, it's a fast-moving space, but I think the biggest takeaway from our dive today, and something this Investopedia article really drives home, is that the regulatory landscape is incredibly dynamic. It's constantly changing. What's considered normal today might be completely different tomorrow.
So how do you stay ahead of the curve?
Knowledge is power. Stay informed, follow the news, and don't be afraid to ask questions. There are so many resources out there now, industry publications, online communities, even podcasts like this one,
Yeah.
all designed to help you understand what's going on.
It's like navigating uncharted territory, full of potential, but you need a good map and compass to guide you.
Perfectly put. And I think the beauty of it is it's still early days. There's a real opportunity for people who are willing to learn and adapt to shape the future of finance. It's pretty exciting when you think about it.
I like the sound of that. A future where informed participation is key.
Exactly. Stay curious, stay informed, and who knows, you might just find yourself at the forefront of something really groundbreaking.
And on that note, I think we'll wrap up this deep dive on cryptocurrency regulation. From the SEC's legal battles to Brazil's embrace of crypto as legal tender, it's been quite a ride.
It has been fascinating to unpack it all with you. Hopefully our listeners are walking away feeling a bit more equipped to navigate this wild world of crypto.
Absolutely. And until next time, keep exploring, keep learning, and keep those questions coming.